Hello and welcome back to the Wall Street Petting Zoo. I'm Christopher Smith, and my co-podcaster Robert Coburn unfortunately has terrible migraines this weekend, so I will be flying solo on this episode of This Week at the Zoo, our market news segment in which we review the week's market news and offer some forecasts for the coming week. This week we started the week on Monday with a 3.5% rally, and part of what drove that rally was talk of a Phase 4 stimulus bill, which would designate at least $1 trillion to revamp American infrastructure. There was talk later in the week of a $2 trillion bill. Personally, I found this rally surprising because there was a lot of bad news on Monday. Among other things, U.S. President Donald Trump extended quarantines for another 30 days, which means the economy will not reopen by Easter as he had previously promised. I would have thought that that would tank stocks, but it did not on Monday. Also, credit rating agency Moody's downgraded $6.6 trillion of U.S. corporate debt to negative, said there's a negative outlook on that debt, suggesting that that debt might go into default if the economy remains shut down. And worst of all, the Fed projected that unemployment may reach a stunning 32% during this downturn, which would be an extremely high unemployment rate. So for the market to rally despite all of that bad news, honestly, I found it stunning. Tuesday, the S&P 500 fell a little bit, erased about half of the previous day's gains with about a 1.6% drop. Partly that was on the news that U.S. oil drillers plan to cut back production due to low oil prices. Wednesday, the market dropped another 4.5% to end the day below the 10-year trend line, so we're back in bear market territory now officially. And partly what drove that drop is that the U.S. oil company Whiting Petroleum declared bankruptcy. And also we saw a drop in mortgage applications by about 25% in March. So pretty significant drop in mortgage applications, which does not bode well for the housing market. Thursday, the market actually gained 2.5% despite a catastrophic jobs report that showed 6.6 million new jobless claims this week, which is double the number from last week, which was already a big number. And the actual number is probably even higher than 6.6 million because the unemployment offices are so overwhelmed right now that they can't handle all the new applications, and the application websites are crashing, so a lot of people who are trying to apply for unemployment have been unable to do so. So, why did the market rally on Thursday? Because Donald Trump tweeted Thursday morning that Saudi Arabia and Russia were on the verge of a deal to cut back oil production by 10 to 15 million barrels per day. The total oil production of those two companies combined, or countries combined, I believe, is 23 million. So they'd be cutting back their production by about half, and that would limit supply in the oil market and potentially support oil prices. So oil prices surged in response to that announcement. And even when later in the day, Russia and Saudi Arabia both came out and said, actually, there isn't a deal yet, oil prices still continued to climb on Thursday, and they climbed again on Friday. And in just 2 days, oil prices gained over 33%. So the huge potential gain in oil there if you had a position in the oil market. Despite the gain in oil prices Friday, the S&P 500 fell 1.5%. And partly that's because of the unemployment report showing that the unemployment rate is now 4.4%. And partly it's because of the rollout of small business loans under the stimulus package. It hasn't been going so well. Big banks like Bank of America are refusing to authorize loans to small businesses that have bad credit, despite government guarantees that the loans are going to be forgiven. And I've also seen that there are technical difficulties. So we've had thousands of applications from small businesses for small business loans, but no money has been dispersed yet because of all of the technical problems with the rollout. So it's looking more and more like this is not going to stave off problems in the commercial mortgage market. Remember, one of the big purposes of this, well, there were two main purposes of this. One was to prevent layoffs in small businesses, so that we don't continue to have such huge jobless claims numbers. And the other one was to prevent small businesses from defaulting on their commercial mortgages, because right now the commercial mortgage market is in a lot of trouble. And if government intervention doesn't help these small businesses pay their mortgages, we could see a huge collapse of commercial mortgage bond prices. Um, so this is pretty worrying in terms of financial crisis. It looked like government intervention might succeed in staving off financial crisis for now. But if the rollout of these small business loans doesn't get fixed within the next week, we might see, the start of a major financial crisis in the United States, which would not be good for stocks, obviously. So I would say be careful out there right now, especially in banking sectors. Okay, although the week ended strong, I'm going to venture a prediction that in the coming week, we're likely to see oil prices fall again on Monday. So, according to CNBC, Russia and Saudi Arabia this weekend were supposed to meet on Monday to discuss oil production cuts, but they have been slinging accusations at each other, blaming each other for the oil price war, trading insults, etc. over the weekend. And so that Monday a meeting has been delayed until Thursday, and the futures traders, I think, are getting a lot more pessimistic about whether a deal will even materialize at all. So the oil market, I think, is likely to sell off in a big way on Monday. Last week, I mentioned gold, silver, and Bitcoin as some of my stock picks for the week, or commodities picks for the week. Gold and silver broke even for the week. We've seen the dollar spiking quite a bit. Gold and silver tend to move opposite the dollar, so ordinarily I'd think they would move up, but because of the big deflationary spike in the dollar, they have held steady. Bitcoin, though, has gained about 17% this week, so Bitcoin had a really, really good week. If you were in Bitcoin, I think you probably did well. I also mentioned Bristol Myers Squibb, which is a pharmaceutical company that, as I mentioned, has announced that basically it's been unaffected by all of this coronavirus stuff. Demand has remained fairly stable. They haven't seen any major supply chain disruptions. So this company looks like it's a relatively safe bet even in this market environment. They've also recently received FDA approval for a new multiple sclerosis drug that could be a pretty big deal. And Bristol Myers Squibb did end the week up about 0.5%, which is pretty good in a down market. So they've definitely outperformed the market this week, and they're still looking fairly strong. And finally, I mentioned the oil tanker company Frontline Limited. This stock started the week strong, but later in the week when oil prices climbed, this stock dropped, and it ended the week down about 15%. What you've got to understand with Frontline is that it's going to move opposite the direction of oil prices for a while, because when oil prices are weak, all of those oil producers are trying to ship their oil into storage so that they can take it out later and sell it at a higher price. So if oil prices fall, Frontline is going to go up, and if oil prices rise, Frontline will fall. So I still like this stock this week because I think oil prices are going to fall, especially early in the week, and therefore Frontline should go up early in the week. Also, this stock is a great long-term buy because it's got a dividend yield hovering around 20%, and I think it should be able to sustain its dividend because of how high the tanker booking fees have been this year. So I don't foresee Frontline cutting that dividend. I think that dividend should stay around 20% at the current level, and therefore I think this is a fairly good long-term buy and hold. As long as that dividend stays in place for the next 5 years, you basically could double your money over the next 5 years as a result of just that dividend. So I am going to continue watching Frontline this week. I'm still watching Bristol Myers Squibb. I think that both of those are pretty good, and I think that there's some reason maybe to short oil early in the week if you play the market on the short side. Overall, I would say mostly still keep your money in cash. I think we're still going to remain in a very weak market environment, probably for the next several months. And then we can start looking at maybe re-entering on the long side in stocks. So stay safe out there, guys. Wear your masks and wash your hands and do your social distancing. And make sure that you distance yourself from some of these risky assets out there in the market as well, because you don't want to burn your grocery money. All right, thanks, and we will see you next week at the zoo.